Supabase just doubled its valuation in 8 months because Claude Code, not humans, is now provisioning the databases. Plus 4 more stories driving the AI tape today. Let's get into it. Supabase closed a $500 million Series F at a $10.5 billion valuation, roughly double its October mark in just 8 months. GIC led the round, with Stripe writing a second check and Salesforce Ventures joining. Databases provisioned on the platform are up 600% year over year. But here is the real signal. Claude Code is now the single largest source of new Supabase databases in 2026. OpenAI Codex is number 2. Agents, not human developers, are now the dominant buyer of AI-adjacent infrastructure. Vibe coding has graduated from a meme to a revenue category. The bear case is multiple-driven. $10.5 billion on a developer tools company assumes agent-driven provisioning compounds, not normalizes. If Claude Code growth flattens, this print is the peak. The forward signal is Anthropic's next revenue update. If Claude Code's downstream pull-through keeps accelerating, expect another step up across the infra layer. If it cools, Supabase peers re-rate first. Robotics foundation model startup Generalist AI raised $400 million at a $2 billion valuation, led by Radical Ventures. NVIDIA and Bezos Expeditions doubled down. Angel checks came from Fei-Fei Li, Eric Yuan, and Naval Ravikant. The company's Gen 1 model runs 3 times faster than comparable state-of-the-art systems, with 99% reliability. This is now the consensus physical AI bet. Generalist joins Figure, Skilled, and Physical Intelligence in NVIDIA's portfolio, confirming Jensen Huang's every layer of the stack thesis. And it ties directly to the Supabase round. Private capital is still aggressively pricing the AI build-out for upside, even as public AI semis just took a $320 billion hit on Broadcom. The bear case, $2 billion on a 2024 founded startup with no commercial revenue, is venture math, not enterprise math. Humanoid timelines have slipped before. The trigger is NVIDIA's August quarter. Robotics commentary will tell you whether physical AI is reaching commercial scale or staying lab grade. Sam Altman spent June 3rd and 4th in Washington, meeting Hakeem Jeffries, Mike Johnson, and Bernie Sanders, then walked into the White House to present OpenAI's response to Trump's June 2nd executive order. That order requires 30-day pre-release government access to frontier models. OpenAI will hand over the first voluntary AI oversight blueprint within 30 days. Altman publicly endorsed the EO. Quote, "The new EO gets the balance right," and disclosed the Stargate Michigan numbers. $16 billion for buildings, $30 billion more for compute. One top customer's token use is up 1 million times in 6 years. This is pre-IPO regulatory de-risking, plain and simple. Anthropic already filed its S1. OpenAI is behind. The bear case. Voluntary compliance becomes mandatory compliance fast. Pre-release review could slow OpenAI's release cadence, the exact velocity that justifies the valuation. Watch the blueprint inside 30 days. Light touch oversight clears the IPO path. Weaponized review compresses sector multiples. Broadcom closed Thursday down roughly 15%, erasing $320 billion of market cap in a single session. That is one of the largest one-day megacap drops on record. The trigger was not the print, revenue of $22.19 billion and EPS of 244 both beat. The trigger was guidance. Q3 AI semis guided to $16 billion versus a $17.2 billion consensus, and CEO Hakeem refused to raise the $100 billion full-year AI target. This is the first serious AI capex peak question of 2026, and it dragged NVIDIA and the SOX with it. But context matters. 10.8 billion in AI semis was still up 143% year over year. The multiple was priced for perfection. The print just was not perfect enough. The bear case writes itself. If Broadcom cannot raise the guide, NVIDIA's August quarter is the next domino. That is the trigger. NVIDIA's August print is now the whole trade. Either it validates TrendForce's revised 830 billion hyperscaler capex number, or it confirms the peak. Bloomberg's Mark Gurman published the definitive WWDC 2026 preview today. Monday's keynote, June 8, 10 a.m. Pacific, introduces iOS 27, macOS 27, and a fully rebuilt Siri that, per multiple reports, runs on a custom 1.2 trillion parameter Gemini variant licensed from Google for roughly $1 billion a year. Multiple reports also peg this as Tim Cook's final WWDC keynote before a CEO transition. Apple will reframe its AI position around on-device inference as a privacy and cost advantage, explicitly contrasting Anthropic and OpenAI's hyperscale builds. The trade is clean. Google gets a recurring royalty stream. Apple keeps capex light versus peers spending hundreds of billions. The bear case. Apple is 2 years behind on consumer AI and is now renting its brain from a direct competitor. That is not a moat. That is a vendor relationship. Watch the Cook segment of the keynote. If transition language appears, the AAPL multiple compresses immediately on succession risk. The through line today: private AI capital is still pricing the boom for upside. Supabase, Generalist, Suno, while public AI semis just took the biggest single-day hit of the cycle on Broadcom. Apple. Monday, NVIDIA in August. That's the Daily Alpha. Subscribe, and we'll see you tomorrow.